Welcome back to Alberta Primetime. As you heard earlier in the program, this past weekend, the Premier took Alberta's revenue conversation to a group of stakeholders at the Economic Summit in Calgary. Here to discuss what was discussed, among other things, Todd Hirsch, Senior Economist with ATB Financial. In Calgary, Bill MacLachlan, past Chair and Senior Portfolio Manager with Mawer Investment Management, and Shafik Hirani, Director of the Investors Group in Calgary. Hello all.
Hello.
Hello. Well, pundits saying today the weekend's economic summit politically useful for sure. Academics, business leaders, not-for-profit organizations from both ends of the spectrum invited by the Premier to participate. Todd, you moderated the first panel. I moderated the second. Tell me what you think the economic usefulness of such a summit was.
Well, I do think it was useful from an economic point of view. Critics are going to say there was nothing brought up at this summit that they haven't heard 100 times before. But the point is we're still talking about these things, you know, and the summit was not meant to be an academic exercise. There were no papers presented or anything like that, but rather some viewpoints about how we can manage our finances, maybe some sensible ways to organize our revenues, maybe some sensible ways to get our spending under control. But I do think there is usefulness in keeping those conversations going all the time.
Shafik, lots of ideas, as Todd pointed out, about how to cope with Alberta's budget shortfall. I mean, we even heard across-the-board cuts. We heard a reintroduction of a progressive tax. A sales tax was brought up, I mean, by all stripes, except for the Wild Rose Party. When you look at all those options, Shafik, how much fiscal sense does a consumption tax make?
You know, that was the big talk, is this consumption tax. In Alberta, if you look at Alberta right now, Alberta is sitting with about $41 billion in revenue and about $42 billion in expenses. So they're running a deficit from last year. And this year's deficit, some people are projecting it at $300 million in operating losses and $6 billion in total deficit. So the Alberta government, the Alberta's consumption is about $100 billion. So a 1% sales tax will generate about $1 billion in revenue. So if you want to fix this $5 to $6 billion shortfall, you're looking at around a 5 to 6% sales tax. And it seems to be accepted by all, but you have to remember that this sales tax comes into effect by referendum. So if it is going to go into effect, it's still not going to go into effect for another 2-3 years. So it might be just political posturing for the moment.
Bill, there was some discussion about finding balance, you know, between budget cuts, between tax revenue, getting Alberta bitumen out. How achievable is such a balance?
Well, I think such a balance is achievable, and I think it's essential. It makes no sense to increase revenues until you're sure that spending is under control and that money is being spent in the best possible fashion. It's important to keep in mind that Alberta, which is obviously a very rich province still, has, as I understand it, the highest per capita spending of any provincial government in the country. And that's something that has to be looked at because the outcomes, the measurable outcomes, don't justify that. So I think before we look at just increasing revenues, and the sales tax would be the most logical way to go, although I can't imagine it passing in a referendum in this province, you have to look at a balance, you have to look at cutting spending, or at least engaging in a serious dialogue about what should be cut, and then gauging the public reaction after.
Well, Bill, speaking of cuts, political scientist Tom Flanagan called for cuts to service similar to what we saw back in the Klein era. AFL President Gil McGowan called those cuts a horror story, quote unquote. How palatable are cuts in service compared to tax hikes?
I think neither are palatable to the average individual. Clearly, you know, people who are involved with unions or employer groups are going to have different views as to what an appropriate balance is. You can argue that a lot of the cuts made during the Klein era were a horror show for some people, but the reality is it did help repair the province's balance sheet in a period in which things were very difficult. So again, I think a balance is needed to be required. There should be no sacred cows. I would say that means you should be open to spending cuts and you should be open to some sort of revenue increase, whether it's a sales tax or something else. But it has to be done in a balanced fashion.
At one point, Todd, I noticed at the conference that somebody spoke to one of the comments that, you know, we just build a pipeline, we'll solve all our problems. Is that the problem, or how do you feel about spending cuts in a balance?
Well, like Bill said, I do think you do need a balance. I think people would be accepting of some increase in revenue if they understand that the government is getting their spending out of control. Big debate, by the way, if government spending really is out of control or not, and that did come up at the summit. But the whole question about pipelines, definitely that would help. I mean, the question Alberta used to grapple with, I've spent my whole life in Alberta, the question always used to be, what do we do when we run out of oil? Well, we know now we're never going to run out of oil in this province. But the question is, what happens if the Americans don't need it? Or at least don't need it at a good price? Or what if we can't get it out of the province? Those are the questions we're grappling with now. And that's why there was quite a lot of discussion at the summit about how do we sort of get these pipelines built, or how can we work with other provinces and jurisdictions in getting them built.
Any answers that satisfied you, Shafik?
You know, Todd has been screaming for years about one good point, and one good point is that the price Albertans receive for bitumen is not what you see the WTI. It's about $20 below, and that's what's leading to this deficit. And one of the things that screamed out at me is that it's not just a revenue issue about increasing taxes and increasing a sales tax, but it's also a spending issue. The government has, the Alberta government has projected a balance of $40 billion in revenue, and they've overestimated the price of the oil, and that differential has cost them the tune of $5 billion. So what screams out at me is controlling your budget, just like Bill mentioned, really getting onto what you project out for oil and what you expect for income and revenue.
Also, Bill, talk of a trade deficit. What did you make of that data released last week, and how does it play into the economic summit, do you figure?
Well, I'm not sure how much it's going to play or how much it did play into the economic summit, but most of the news that was released late last week indicated an economy that was weaker than many expected. Even in Alberta, the unemployment rate moved up, I think, 0.3%. And it just highlights the fragile nature of the economic recovery that we're involved in. And obviously, a trade deficit is not something we want to see. It's not good for the currency. It's not good on so many levels. And to put it bluntly, the economic data last Thursday and Friday was, in my view, more of a horror show than some of the spending cuts that the provincial government is considering.
What about you, Todd? I mean, those numbers showed that out of the U.S., oil exports were up and numbers were falling off. So what do you suppose those numbers mean for Alberta? Yeah,
the trade numbers on Friday, they sort of highlighted exactly the problem. One of the big things that Canada is exporting less of to the United States is oil, at least the value of that oil. It is lower priced. So that's exactly, it highlights exactly the problem that Alberta and particularly the provincial government's dealing with.
Shafik, you said that you were watching housing starts on your radar. How did the numbers factor into what you saw happen last week?
Yeah, the projections last week were for 200,000, a little under 190,000, and housing starts came in about 163,000. So that was also very disappointing, and it looks a little bit like housing is due for a little bit of a correction. The numbers are worse. On Friday, if you do want to keep an eye out, the average price for housing is being announced, as is by Stats Canada, as is new home starts, which is also a leading indicator to see what's going to happen with housing.
So it looks like this economic summit was rather timely, gentlemen. All right, after the break, why do we pay more at the till than our neighbors to the south? And will it ever change? We're back with our money experts right after this. Welcome back. As any seasoned traveler to the U.S. will tell you, there are deals to be had south of the border. And many Canadians even plan their vacations to take advantage of cheaper prices. A report tabled last week in the Senate by the Finance Committee still struggles to find an explanation for the price gap. First question over to Todd. What can be done?
There's not really a whole lot that can be done other than Canadians sort of shopping harder for deals and letting Canadian retailers know that we're going to be a little bit more choosy in what we buy here. Because if Canadians do start to protest and say we're not going to buy these things, you will see those Canadian retailers start to lower their price. The reason Canadian prices are, a lot of the reason is that people will pay.
How, Shafik, should Canadian consumers pressure retailers?
You know, there's a couple of things. I mean, like Todd said, you just don't buy the products that are expensive. And this is kind of funny because Mr. Flaherty announced this research 2 years ago. He said, listen, Canadians are paying too much, more than the United States. Let's do a research project. They finally come out with the research project today, 150 pages, and the answer is, well, we don't really know. And it might be tariffs, it might be this, but you know, it goes back to what Todd was saying. It's just supply and demand. Canadians are willing to pay for it, then prices will be high. So how you can avoid it, just don't buy the products.
Well, just curious, Bill, about the role that import duties play. I mean, are we protecting domestic manufacturers or are we hurting our retailers?
I think we're likely doing a bit of both and hurting the consumer as well. You know, we do have a more punitive, if you will, tariff structure than the U.S. That's part of the reason, along with population density and many other things that mean we pay more. And at the end of the day, I guess we have to decide as consumers and governments have to decide how important is protecting certain industries at the cost of higher prices. Dairy industry is a good example. If you've looked at the price of a pound of cheese in the U.S. and Canada, there's a big difference. That's because we protect our dairy industry. I'm not going to comment on whether that's appropriate or important, but those are the kind of issues that we have to grapple with if we want to have prices that are comparable. And I agree totally with Todd and Shafik. At the end of the day, the consumer can cause retailers to change their behavior if they vote with their feet. And then the retailers will squeeze their margins as much as they can while still staying in business.
We don't have the quantity of consumers to buy in bulk. We have vast distances that goods have to be traveled, Todd. So is there some merit then to these arguments?
Well, I guess there are, but you know, another thing that comes into play is when most Canadians go down to the United States and shop, they are going to big consumer centers. They're going to Las Vegas, they're going to New York, they're going to where they are going to, there's going to be a large number of people buying those things. So retailers in those centers, they can afford to, you know, really reduce prices and cut prices because they're selling so much volume that they're able to do that. So it's not always, you know, fair to do that cross-border comparison as easily as I think some people do.
Let's quickly check on the radar. What's on your radar there? Shafik, let's start with you.
Yeah, you know, like I mentioned earlier, the Friday's numbers for housing are coming out by Stats Canada. That's going to be a really important number to gauge the strength of the Canadian economy. And the European Union is meeting as well on Friday. They're going to be announcing some of the deficits of Greece and Spain. So that should be really interesting, and it should be noted.
Todd.
I'm going to be watching the manufacturing numbers out on Friday, and the reason that is because a lot of Alberta manufacturers, it feeds directly into the energy sector. We've been seeing a little bit of flatness in manufacturing over the last 6 or 8 months. I'm going to be watching that to see if it portends worse times to come in 2013.
And what's your feeling?
I think it'll be still a little bit level. I don't think we're heading for any kind of recession. I think all this talk of doom and gloom is a little overdone. We are heading for a distinct moderation in Alberta's economy, but we're still going to be well above, our nose is going to be above the surface of the water for sure.
And Bill?
I'm going to be watching two things. I'm going to be watching for more layoffs in the global banks and investment firms. Barclays is laying off 2,000 people tomorrow, and we'll have to see if this is another canary in the coal mine, that there are more cuts to come and indications that things are not all rosy within all these big financial institutions. So I'll be watching that. I'll also be watching China. The data came out just a day or so ago that China surpassed the U.S. as the world's largest trading nation if you just add up exports and imports. So I'll be watching Chinese data very carefully to see if this is a continuing trend and at what pace it continues, because that speaks, of course, to commodity demand, and that matters very much here in Canada.
Well, thank you all very much. Interesting as always. Todd Hirsch is Senior Economist with ATP Financial. And in Calgary, Bill MacLachlan is Past Chair in Senior Portfolio Management with Mawer Investment Management. And Shafik Hirani is Director with Investors Group Calgary. Thank you for joining us.